All right, hello everyone. This is the third time I've done this. I don't know, but my OBS was not working and not showing my screen. So, hello again. Even though this is the first time you are seeing this, I am starting the series where I am going to be just giving my thoughts on the market every single day in an effort to make myself a better trader. I found that in other areas, teaching has helped me become better at what I do. So tennis is a good example. I'm a tennis player and I'm a tennis coach. And being a tennis coach has helped me be a better tennis player. I think the same thing will apply to trading, except I'm definitely not as good as trading as I am in tennis. But I feel that giving my market opinion, getting it out in words, the attempt to quote unquote teach someone, a hypothetical viewer, will be helpful for me and only help me become better. So that's why I'm doing this series. Will it continue? Will it not continue? I don't really know. But figured I'd start this, try it out for a week, 7 days, see if I like it, see how hard or easy it is, and then take it from there. So I'm going to start first with the market backdrop, long-term, fundamental, technical, short-term, and then I'm going to go into how I play it, and then I'm going to go into what stocks I like, give some picks, and then I can evaluate it next video and see how they do. So let's start with the market backdrop over here. So I have the SPY D1. And let's start with October. So we have this huge rally up about $70 from low to high, broke through every single possible resistance known to man except the all-time high. Very little retracements, basically no pullbacks. We get this one-day pullback. You can count the number of long red candles that we had in this month. There were 4. 1 here, 2, 3, 4. I don't even count that. I'm not even sure if I can count this, but you can maybe count that. But very few. We rarely dip below the 8 EMA, so it's a strong, fast move, right? We covered a lot of distance very quickly, and we could do that because we didn't pull back that hard, right? When we stick close to price and buyers are very interested, we keep pushing price up, and that's when we get these very strong rallies. So the fundamental backdrop changed because the Fed kind of changed their tone. The market was pricing in some rate pauses, some rate cuts, and the Fed kind of confirmed those rate cuts for next year. So the market is going off of anticipated rate cuts. And we're assuming that we're pretty close, or we're basically at the terminal rate right now. Inflation has been pretty low, and we had a nice reaction from the inflation reading earlier in November. FOMC came out over here, and we've had pretty good numbers on the economic side, and we've had no bank failures. So the fundamental backdrop is pretty bullish. The technical side, like I said, the speed and price action of the move, the volume was a little bit light, and then it picked up here kind of in December. We started to see some volume pick up as we confirmed the bullish move of the rally. We also had seasonality, which was a very strong play. Asset managers wanting to buy stocks and be allocated into year end. They want to get those bonuses. So a lot of factors in that favor. And this is the first time I've seen seasonality since becoming a trader. If you go back to 2022, right? This was, still 2023 here. 2022, this is the seasonality I saw in 2022, right? Complete garbage. So this told us to be careful heading into the new year. January ended up being quite strong. But over here, right, this is where we thought, okay, we could maybe challenge the low of the year, and we ended up not. March, bank failure, regional bank failures, but then it was mitigated. We kind of had this waiting period, and then debt ceiling was kind of alleviated here in June, and we started to shoot up and make a new high of the year. All right. So that's the backdrop here. The long-term tailwind is bullish, and that drives a lot of my trades. Now, the short-term tailwind this past week or so has been bearish. We've been making lower highs and lower lows. We've had a couple of days below the 8 EMA, below AVWAP-Q, and we are testing this breakout level right here from December 13th. So this is a shorter-term bearish trend, right? So when the shorter-term trend does not align with the longer-term trend, it creates for a lot more low probability trading scenarios. And you have to be careful. I think a lot of novices can get overextended in these areas, right? When the price action is starting to be choppy, these 2 steps down, 3 steps up pattern versus the nice kind of cleaner breakouts we saw here, here, here. So we know we're close to the all-time high. We don't want to be too out in front of our skis, as Pete says, in these scenarios. Wait for the break, right? I like to wait for the pullbacks or wait for those compression breaks, and then you can really get more aggressive into positions, into a wide variety of positions, and a large amount of size into position if you're trading with size. So long-term market bull, short-term market bearish. We are pulling back. Okay, so how do I know it's a pullback and not a retracement? Well, the macro backdrop hasn't changed, and we've had a very strong rally, right? If we have a really strong rally like this, it's going to take a lot for buyers to change their mind. Okay, and if you don't know what that looks like, you can go to 2022, where we had this longer term trend, and this was the price action that we needed, right, over the course of, let's call it November, right? This kind of period right here. This is what it takes for buyers to change their mind. We're still in the bullish trend, right? Even with these deep drops, buyers are going to make another attempt to get here. When we can't get past this new high, that's when we have to be a little bit more careful. Okay, we don't want to be over leveraged in these times, and that's when day trading is going to become more viable because you have these trend days in both directions. So this is what it takes for the market to change its bias, and there has to be, again, some fundamental catalyst. Right here, inflation was a catalyst. There has to be a recession catalyst, bank failure catalyst, credit concerns, right? If those aren't surfacing, then institutions aren't going to change their mind so quickly because they want to reduce risk. Here is the fighting of institutions as they're trying to determine what the path will be like for the future. And when we get this right here, lower low, lower high, breaking through all of these, okay, then we can start to get bearish. So that's what it looks like for the market to change direction. You will have time, right? That's kind of the key theme here. There's time for this to change, and the price action has become a lot steadier. The ATR has gone down. The move down isn't on crazy, massive, stacked red candles, right? We're just pulling back. And I believe part of this too is some end of month, beginning of month fund reallocation. Stocks have been doing really, really well. If you have a certain percentage needed for stocks, bonds, and different stock sectors, then there's going to be profit taking and buying across sectors to rebalance according to those percentages. So I believe we're seeing some of that now, and the bit is softening. Now, I still believe that we're going to see a move up, and the reason for that is a couple of reasons. Or my reasoning for that is a couple of reasons. I don't know if you can use reasons twice in that sentence, but whatever. So the first reason is that we have this long-term market strength, so we're going to know that we're at least going to challenge the move up. And the worst case scenario, or I guess the second worst case scenario, other than the bottom falling out, is a lower high. So it gives you time to get out of your long. I don't believe that's as likely. I believe we can at least challenge this high over here. If we get a really deep retracement, like Pete was saying, a big 5% retracement, that would take us back to this red line over here. Okay, right, that's a pretty deep retracement. It just shows that buyers aren't as engaged as they were, and we gave up a lot of ground. So it just means that the trend is not as strong, and we have to be a little bit more careful with our swing longs. The further we go down, the less likely we are to break a new high, right? We want to be as close to this high as possible, so that way we are basically right at it when the trend starts to pick up and we can break through it very easily. The deeper we retrace, the farther we have to cover to break this high. Second thing is earnings. Earnings season is kipping off. I'm not sure if it's doing a kip. It's kicking off on the 15th. So with bank earnings, there's usually a bid into earnings. So I don't think we're going to see a bottom falling out over here. And that'll be another force going in our favor. We also have some CPI events coming out next week. We had a lot of news coming out this week, but it didn't really produce a lot of movement. You can see there's a lot of volume over here, but not a lot of movement. So that is disappointing, but it happens. Sometimes things that could move end up not moving. So that's kind of my bias for next week. I do think we're going to see a bounce. And so far, this pullback hasn't really rattled me. We're still at the breakout level. And the price action has not been very convincing. We've had pretty tall bounces. And we do have lower lows and lower highs. I drew kind of this wider channel here. But it's not a very convincing move down. It's just sort of a choppy, low probability move down. You can see that we try to test one end of the channel, it fails, go down, test the other end, fails, go up, maybe hit VWAP, fail again. So that's kind of what I'm seeing here. How am I playing this? I'm not taking any swing shorts because swing shorts in a bullish market have kind of wrecked me. I might get a pretty decent win percentage like 65 or even 70, but usually the losers, I have a couple of outside losers that just destroy everything I earn on my winners. So if you're going to short in this market, you need to be nimble. So only day trades. I won't even risk overnight swings because you don't know when we are going to get this move back up. So you have to be willing to dump those positions very quickly if they don't work. The one stock I did like was Crocs. Crocs was a nice swing short over here. Really nice relative weakness when it broke through here on January 3rd. That's a nice day trading opportunity. Another day trading opportunity here later today when it didn't bounce at all with SPY. And when it started to reverse later in the day at around, looks at 145. Wow. So as soon as SPY started to stop going up, look at that. Crocs just completely tanked over here. So that is some really nice relative weakness. There's some pockets here. I'd love to enter on this LRSI cross, stacked red candles. Beautiful. But you have to be pretty selective, and I've just really been not trading at all, to be honest. I think I took one bullish explosion alert trade, and that's it. I closed 2 longs for a loss, and I took profits on an order of the bounty short call that I have on Abbott. But very, very light week for me. And because the probabilities are not lining up, right? When the short-term trend is contra to long-term trend, it reduces your chance of success over a long period of time, right? So you have to confine your trading time frame to a much shorter time frame or a much longer time frame. So with a very long-term swing, like Abbott, right? This is holding up pretty well above its breakout here, compressing while the market's going down. So there's basically, no reason for me to exit the swing because I can weather it through a pullback, right? And this is the wrong chart I actually changed here. Let's go over here. Now, another trade it closed for a loss was Affirm, right? Affirm was nice, but it couldn't hold up, right? Abbott held up. Affirm couldn't hold up. It hit this resistance point here, couldn't break it. And then it fell below my stop, and I took the loss over here on Jan 3rd. So Affirm is nice. I like this breakout. And this was the warning sign here on December 20th. Fell down with SPY pretty hard. It did hold a lot of the gains here, and it did claw its way back up, but then it fell again here, forming this double top, lower high, and I'm out of the position. So some stocks that are losers, I cut, and I don't have to worry about them. I know, and this is the thing that's nice when you start to feel confident. If the market tanks and if it closes all my positions, I'll take a smaller win on some of the ones that are doing well. But I know I can make money on both sides, and I know I can make money day trading if the volatility and the days get better and increase. Like we see here, a lot of big red days, long green candles, right? When we have these volatile days, that's when day trading becomes a lot more viable. And I feel totally comfortable doing that. I didn't feel as comfortable swing trading on the bullish side. So something I'm picking up right now. All right, let me give you 2 picks. So this is a longer term pick when the market finds support. I can even argue that I would be fine scaling into it, taking a starter position now on the stock. And here's for the couple of reasons. So Amgen has held up pretty well during that entire market decline, kind of compressing over here. But more recently, it was not participating in the rally, but it was starting to participate here, January 2nd, and we held this breakout while the market was going down. So that's really, really nice relative strength. And that's also partly due to its sector. The healthcare sector was really strong with some news with the Moderna as well coming into effect. But what I like about this stock is that it broke through this prior high. So let me scroll over here. This prior high all the way from November 8th, 2022. It broke through that, and it managed to hold all those gains while the market is going down, right? So let's put an overlay here on SPY. All right, so this is where you can really see. Let's do the M15. Maybe it's a little bit clearer here. Okay, so here's the breakout. Okay, really nice, holding all the gains. Market is slowly trickling down. Amgen is slowly grinding up, right? There are buyers here scooping it every time the market finds some ounce of support. So I really like this breakout on Amgen. You are pretty close to this major D1 resistance level here. So I'd probably use this as my stop around 296.50, which is about an ATR away. And there's not really any nearby resistances coming up. You could maybe do like a high plus trend line over here if you wanted to. But even that's not like really, really coming into play. So I like Amgen. That is my top pick. So we're going to see how that does over the next few days. I haven't bought it yet, but I may buy it on Monday, depending on what the price action looks like. ANF is another one I like. So I didn't like the price action today, but it was looking good pretty much right here before it started to totally tank with the market. Still holding up all those gains, but nice steady grind higher pretty much for the past 9 months. Found support early while the market was dropping and managed to grind higher. It also does pretty well after these pullbacks, right? It pulls back to this new level and then it shoots up to make a new high, pulls back, shoots up to a new high. And you can see how well the stock held up during the market decline earlier last year in August, September, and October. It was able to grind higher while the market was moving down. So there's still really nice relative strength in the stock, and I like it for a longer term swing. It had earnings in November, so you have some time, not really anytime soon in my opinion, probably February is when it's going to have earnings. So a put credit spread could work really well on a stock like this. So yeah, those are my 2 picks. I hope you found them helpful. We'll see. And I'm excited to see how this series goes. Thanks for listening, everyone, and I will catch you on Monday.